Welcome to this week's presentation on mortgage news you can use. My name is Jesse Byer of the Byer team, and we're going to examine the housing market a little closer. We're on the heels of the Fed's recent announcement to increase the funding rate by 75 basis points. And while there has been some new inventory hitting the market, the home prices are starting to normalize. What does all that mean for the future? The number one rule in economics is supply and demand. Less supply and more demand creates higher prices. Is there anything on the horizon that could change that dynamic? Are we going to see more homes coming online soon? We know higher interest rates are tempering buyer demand, but is that enough to balance the markets or even reverse course? Let's look at a couple slides and see if we can get some answers. Housing, supply, and demand. In today's presentation, it's about, as you guessed, supply versus demand. And we'll first look at the demand side of things. Housing demand, which we look at, is household formations. But first, you have to know what household formation means. Household formation is when a new home is being purchased without a home being sold. This could be someone living with mom and dad, or it could be a divorce situation where one spouse has to go and buy a new home. The key distinction here is a home is not being sold. There is a new household formation, so the current inventory is being consumed. Now, if you look at the chart, there are 1.4 million households currently being formed. Historically speaking, we are currently above the average dating all the way back to 2000. And there's the lines. So household formations, when you look at the new housing supply, it can't come from someone looking to sell, because they will typically, when they go to buy a new home, that would be a wash, right? If you're buying and then selling, you can't count that as a new home creation or formation. We have to look at new construction, which is housing starts. That's a good starting point, but you have to account for homes that are being destroyed, such as obsolescent homes or just things that are, worn down. So the real number is actually closer to 1.6 million homes, per year. Now, we just talked about the demand being 1.4 million, which would lead you to believe that we have a 200,000 annual home surplus. But to be more accurate, you have to know the difference between housing starts versus housing completions. Housing starts would be if you are putting a shovel in the ground, right? Breaking ground, building a new home. Can't move into those homes. It takes a few months for, to get the home to be built and completed. So you have to look at home completions. That's when you can actually move in a few, as soon as you close on the purchase. Those are the new construction builds ready to go and ready to be occupied. And that number is close to 1.3 million. You take into consideration the still 100,000 homes per year that have to be destroyed. That puts our inventory level closer to 1.2 million. Now, going back to demand at 1.4, you're left with an actual housing deficit. And things are actually getting worse. We're going to look at existing home inventory. So when you take a look at it, you see at the bottom right in blue, you see 1 million homes, give or take, on the market currently. We've been hearing more and more homes are coming to market. Don't be fooled. Historically speaking, we always see more inventory in the spring around this time of year. Think back to your childhood, right? You might recall when you were a kid at school, had a new student come in sometime during the middle of the year. It was tough for those kids. Friendships were already made, cliques had formed, and they were, those were already established. It's not always being the new kid. Heck, I was a new kid myself, so maybe you were too. But parents are aware of that. So what they typically try to do, if possible, is wait to sell and buy a new home in that spring, early summer time frame, so that their kids don't have to go through that, the challenges of creating new friendships. Well, so that's why, where we start to think of, the spring home buying markets, not just flowers blooming, right? It's also when homes, you'll start to see more homes come online and more transactions take place. So, but look at the chart. The highs are much lower year over year from 2018, and the lows are that much lower, right? Your high is here, and then it slowly starts to taper down, and your lows do the same thing, right? So, what's interesting is the actual 1 million homes that are on the market for sale also include homes that are under contract. 60% of the homes that are under contract, you can't buy those, obviously, right? So the real number is closer to 400,000 homes that are currently available. And for a country of 330 million people, or 130 million households, that means slim pickings out there if you're trying to find a home. So to put that into context, 400,000 homes. To put that in context, let's think about what 400,000 homes means historically speaking. 400,000 homes is a very low number. In June of 2016, there was 1.55 million homes available. Once again, we're taking out that 25% for homes that are under contract. As compared to April of this year, there was only 409,000 homes. So we were referencing 400,000 homes because 60% is under contract. So the question is, is the inventory really picked up? Well, I guess from the lows in April, we've picked up 33,000 new properties. But if you look at it, historically speaking, the answer is no, right? There's just really not that much inventory. And this is the uptick that we're seeing in the spring market. This is national data, so every market's a little bit different, but by and large, there is a lack of supply. We agree, higher rates may be slowing down some of the demand, but there's still a major housing shortage, and that will continue to keep home prices very high. Maybe not 100,000, 50,000, or even 30,000 over ask, but which I think we all can agree we don't want that either. But we're not going to see any sort of significant decline, right? This is coming into what's more of a normal or realistic housing market where homes are priced where they should be. So, and how do we know we're not going to see the bottom fall out and values plummet? Well, you have to go look at vacancies, right? The reason is vacancies. When you are carrying two houses, you have two mortgages, two property taxes, two sets of insurances, and you have to maintain the lawn and gas and electric. All that stuff starts to add up, right? So if you go back and look in 2007, you're going to see that vacancy was like 3% per this chart, right? Well, that's a lot. Today, it's at an all-time low. We're less than 1%. There isn't the same incentive to have to unload the house or take a huge price hit just to move it, right? There just isn't the need for that drop with record low inventory and vacancies. As you can see, the overall housing market should remain very healthy, and another reason buying a home in today's market is still a really good idea. I hope you enjoyed this presentation on mortgage news you can use. And if you enjoyed what you've heard today, please hit the like button and comment. And also make sure you subscribe so that you'll be notified when I release new content. Have a great day, and hope to hear from you soon.